Good morning.
Good morning. How are you doing?
Good, good. We were just talking that maybe Monday mornings isn't the best day for us to be doing this.
I know. It's like we're already tired, and then it's like, oh wait, what do we got to do now? What happened? We're still like processing the coffee.
Yeah,
So it's fine though. We'll power through.
yeah,
We
we'll
should
power.
they were talking about maybe we got to change this to like a coffee hour. That's what it is.
Mhm.
We're just gonna
Yeah,
just caffeine up, and we'll see us get more awake over the call.
yeah. So I think that's what we'll do, and you'll hear more information about that. That starting May, we'll move into like a lunchtime hour. So it could be like after you've had lunch for your coffee, or like while you're eating lunch. If you want to just listen to us, you can put on your headphones. And just to remind you, we're not only live on LinkedIn, but also on YouTube. And
Mhm.
sometimes YouTube might be easier for people to find since you can just search our channel. If you go to our channel, if we're going live, you'll just see it. And then you can just listen to us while, you're getting your lunch ready or
Yeah.
whatever you might be doing.
Yeah, but we'll also be taking what, the next 3 weeks off just because like next Monday we have developer U in town and we're just tied up all day. And then after that, I'm going to be hiking the Inca Trail. We're going to hope I like stay on the trail and we'll be back by May so we can get back to the show,
Yeah.
right?
Yeah,
So,
and it's also the Easter like holidays, like on the 21st of April. My kids
mhm.
are off, and I'll probably put them in some camps unless we decide to go somewhere. But we just decided we won't be able to go live then, um, and so we'll come back together again in May and do it at a lunch spot at 12. So you'll get some updates on that.
Good.
But anyway, now we're here. Thank you all for joining. Um, what's been happening this past week? We had our work Wednesday that we do almost every other week at our 820 Gassner location, where we just kind of open our location. It's mostly geared towards our members, but also for people who are curious about us, what we're doing, and want to just connect with the ecosystem. I know there are a lot of people like right now who are in transition in between jobs. We often get many of them to come in. Some of them want to get more involved with the entrepreneurial ecosystem. And so it's been a great way to meet these people who have, like, a lot of them who come by have, 15, 20 years of like really good energy industry experience, and can serve as great mentors to our founders. And I know many of them have been able to connect our founders with um, some great experts within the companies that they have experience working in.
Yeah. And and I think we're also getting into the groove with being out there at Gessner, out with Metro National, and had a really good lunch with folks just around the table. And I think what's interesting about the Work Wednesday is just a third of the people are kind of new to what we're doing. It's always different entrepreneurs and innovators, and so it's a good place to kind of meet new and different people. So I found it very fortuitous in that sense. And then this week, we're also doing a Work Wednesday, but we're also coupling it with our Founder Circle, which is a members only event that happens right after lunch, where we get basically the executives together in the room, share growing pains, get some impromptu coaching. Rosella, who's our professional coach, is there kind of guiding the conversation. And she's really great. And I know the entrepreneurs who are in it really get a lot of value out of the coaching. So that's on Wednesday, and again, that's kind of a members only program.
Mm. And
Yeah.
then this week we have a rice business plan competition on Thursday, Friday, Saturday. Can't believe
Mm.
it's already here.
I know.
Um,
I missed the sign up for it. I'm a little like bummed, but I know
yeah,
you'll
yeah,
meet all
I'll
the
be
cool
there next
stuff.
time. I'll make sure I put in a reminder to remind you too.
Yeah.
But yeah, so I'll be there on Friday and Saturday. So if you're around, do come by, say hi. I'm really excited to see these startups that come from all over the US, sometimes even from other places around the globe, like from Europe. Um, and always just super impressed by the way that they're able to pitch and explain
Mhm.
their idea and some of the really complex problems that they're working on. So really excited to make some connections. And often, especially the top 10 finalists, we follow them very closely. Brad Burke had a picture of the winner from last year was actually an ice cream company called Protein Pint, and they
They
were
were great.
yeah,
They
but
were yeah,
he had a picture of like how their product is now in the market. You can buy it at Kroger, their
yeah,
Protein Pint ice cream. So I'm gonna have to try that. But that they're actually doing really well. They've been able
yeah,
to fundraise. Their product is in the market. They're scaling in Houston, in Texas. But just goes to show
yeah.
the importance of this competition, especially in our region where there are not many.
Yeah. No, honestly, like you see those guys pitch, you can tell they can raise money. They got a product that matters. I just like, on the one hand, I'm not into consumer packaged goods, and I shake my head just because like I know they're going to do well, but it's not where we're necessarily spending our time and attention because we're kind of mission driven here. But
What, are you saying ice cream's not mission driven?
Oh man, let me tell you where to begin and end. I will say, okay. Here's how it'd be energy tech. Okay, so a lot of like candy, if you think about it, is a way to store food and calories, right? So like chocolate bars are in protein, like chocolate bars are protein bars. Let's be honest. It's just we didn't know how to make protein bars in the past, because it's like if you think about like this is it, the Snickers bar. It's got nougat, which is sugar. It's got chocolate, which has proteins and vitamins, and it has nuts. And so it's like actually like a good little energy packet, which is why they handed them out to people during wartime because like you could take it with you and it doesn't melt too much. So with that, we can say it's a food tech and therefore part of the energy supply chain, and therefore it's an energy story. So that's my long chain of like how we tie this back to energy tech. But on the other hand, I'm not into CPG. That's just not my thing. So, but I appreciate
Yeah,
it.
yeah. Um, no, it was interesting because you mentioned like it's energy tech. Because I wrote a post yesterday about CTVC. I was reading the newsletter and they had posted the top 10 deals of Q1.
Mhm,
And one of the companies there was Chestnut Carbon, which is a nature-based
mhm,
solution. And it's always impressive to see nature-based solutions versus like tech solutions that are very like tech heavy, right? We see those often get funded because the tech nerds who have the investors who got rich from developing their
mm,
own technology, whether that's digital technologies or hard tech, they like to fund other technologies. And I know one of our members, or a few of our members who are working on nature-based solutions, always kind of complain about how we don't value the nature as much, and how the nature could also be leveraged to solve some of our biggest problems, especially when it comes to decarbonization. So it's great to see that this company, who's a forestation company, basically they plant trees, they take land that's been mismanaged or has been degraded because of excessive farming, and they kind of reforest it and ha- let it be a CO2 sink. So Chestnut Carbon just wanted Series B with 160 million dollars, which is probably, I mean, I didn't research this, but probably one of the biggest fundraising for a nature-based company.
yeah,
And I wonder if it's a Canadian company because it was led by the Canadian Pension Plan Investment Board. And it really came at the back of a big deal that they got from Microsoft to remove 7 million tons of CO2 over a 25-year period. And this was for Microsoft, the largest carbon removal contract. And I know Microsoft been doing a lot of deals recently for CDR, carbon removal.
mm.
And the fact that this was biggest and it's a nature-based solution, I thought was pretty impressive.
Yeah, so I'm looking at who's on the cap table. So Nancy P. Fund at DBL is a pretty strong U.S. lead, and then
Mhm,
Kimmeridge, they're also like more private equity or energy equity.
mhm.
So it's still a good group. And then obviously Canada's in. Canada has the uh, things like the Alberta Protocol and others that are kind of advanced on measuring carbon. But like the thing that's like in context here, right? Like what happened this week? I think the current administration opened up federal land, for timber harvesting, right? Like logging and stuff like that. And you look at this and go, okay, is this the opportunity is this bad timing in the market because now like you put the trees in the ground and someone's going to say you can cut them down. But I think it's actually a good opportunity, and I'm not going to use the dreaded pivot word, but here you get an opportunity to kind of grab up the rights of these trees and say what's the carbon that I'm keeping sequestered in the ground. Obviously, it's not a fair comparable because they have a method to measure kind of the conversion of assets to just long duration storage of carbon, but someone's going to look at this and say, look, if there's a way I can keep the trees from being logged, that's better than converting them. And someone like Chestnut's going to be the one to say, look, no, we're actually going to buy up the rights for all these forests that already exists, and let's figure out how to keep them forests. So it's a interesting opportunity to be kind of in that right time and place. So hopefully we see interesting things out of them.
Yeah. And it's more like when you think about it, a lot, it's like a real estate play, basically, because you're basically just getting a lot of real estate. So I think the people who are like behind Chestnut Carbon have a lot of experience with land acquisition. And then secondly, someone I posted about it on LinkedIn and people were like, how's that tech?
Mm.
And I said, well, actually almost all startups, if you're not using AI today, you're like being left out.
It's
A big opportunity.
Yeah, it's like, how do you price the asset efficiently,
Mm,
right? And it's
mhm,
like that's with any land acquisition. It's like everything from like going into Zillow and looking at your like home price. It's all AI
mm.
driven, and you
It's
can
all about,
arbitrage when you have a better model, right?
yeah, and also in terms of like quantifying like the real impact that you're having, like on CDR.
Hmm.
So they use AI models to do that. And one of the things I read about them was like really working against big accusations that companies like this often get it against greenwashing is how do you actually quantify and say that we are actually removing CO2 and we're actually a sink. And I know Microsoft often is very concerned about that when they're investing in
Yeah,
these technologies. Yeah. Mm.
they're going to want to know those quality and those credits, and so that's really good stamp of approval,
Mm,
for
mm.
sure.
Yeah,
But
and then this company that got the most amount of funding in Q1 was Cobalt Metals. And
okay,
this is something that we spoke about, Jason, was with this new administration, and people often ask us, what is it going to mean? Yes, it means that they want to amplify a more fossil fuel, more drilling is kind of the key message, drill baby drill. But also, it's not only just oil and gas, right? It's like resource extraction. And so this is what this company does, is basically a sustainable way of sourcing critical minerals like lithium, cobalt, nickel, copper, and again, really leveraging AI to find these resources and get them out of the ground in a sustainable manner. So it also is a reflection of where people are willing to invest right now, given the market dynamics and the uncertainty in some of the other areas where people might be holding off. But since people do have capital, they want to deploy it, they're deploying it in areas where they do see, at least for the next 3 years, there'll be a focus.
yeah, no, I remember running into Cobalt. I'm trying to remember if I if I met them in 19 or 20. And it was one of those things where you find entrepreneurs who kind of see the market changing and they like predict the future and say, look, if there's a supply constraint, what technology do we need that's going to create kind of unfair market leverage or unfair market value? And it's just a good case study and just timing the market really well. They obviously have great grade A investors, and we're off into the races. And the nice thing about AI is it's software, so solving a big problem, meeting a big and growing need, and that they're gonna grow very efficiently, which is why I think we're seeing such big and accelerated growth.
Mm. Yeah, so they raised 537 million Series C.
Mhm. Mm.
So again, a big round.
Oh
Uh,
yeah, oh yeah.
but this is just the norm for these kind of technologies. And then the
Yeah,
rest there were three deals that were connected to nuclear, which is again also a reflection of nuclear is the focus for the new government. Also, they're thinking more and more nuclear to power the data centers of the future. So a lot of them are connecting to that demand that people are foreseeing. And then the other two companies on there were biotech solutions,
Hmm.
Inari and Tidal Vision. Not exactly sure what they're doing, but yeah, biotech. And I was reading a bit more on like the IPO landscape, which
Mm,
has been pretty dormant over the past 3 years, just
3 years.
because,
Yeah.
yeah, 3 years, and they were hoping that with the new administration, uh, it would it would loosen up a little bit,
Mm,
but because of the added uncertainty of the tariffs, um, Klarna and StubHub, which were set to IPO this year, have postponed their IPOs.
yeah.
And one of the companies that did IPO recently was CoreWeave, which really didn't do as well, which
Did
is a kind of
it.
indication of, and CoreWeave is like AI hyperscaler, right?
Okay.
Right on point, like data centers, things that people are talking about and need, but just them IPOing pretty confident that they would do okay. But I think they wanted, not exactly sure what, yeah, their goal was like, sorry, I lost what I was reading here on CoreWeave, but yeah, here. They were hoping that they would get a valuation of 47 to $55 per share, but they ended
Hmm.
up with $40 per share. So
Okay.
with a valuation of 20 billion, which
Yeah.
still sounds pretty good, but for what they were hoping for, it was less.
Yeah, and I
Yeah.
think, like, some of it, I'm not gonna pretend to be a public markets kind of expert, but I think some of it also is just, like, a successful, IPO is one where, you have a nice pop, the underwriting banks, obviously make money, but then it, like, creates momentum, because then, like, how do I wanna say this? Like, sometimes going public is as much a marketing story as anything, right? Because you're creating confidence for your customers that you're going to be around. That if you need to raise capital, it'll be low cost, and there's a lot of work, right? Because you have to like add a bunch of overhead to do all the public reporting, but it's also a mark to your customers that you are large and substantial, and you're gonna be there to back them up. And when people are putting kind of their mission critical data in place, they want to see that the customer is legit. And it's just we buy data services from like a little company I've never heard of, and sometimes the IT is questionable, and I go, "Is this because I hired like some tiny company that actually isn't resourced, or should I go to the brand name everyone knows? Like, do I need to go to GoDaddy instead?" And just when you're a public company and you kind of create this hype cycle, and have a good pop on your IPO, I think it's part of that marketing story that no, this company's got its stuff together and it's in growth mode and it's creating value for customers, and you can really use that like public nature to be an additional channel for like why your business is a good business. Because the reality is like you want your vendors to also be high quality and stable, right? So uh, I can totally see why sometimes you just want to wait and stay private, because it does interplay on just your ability to be in the marketplace as well.
Hmm. Um, yeah, exactly. And like at a time when the stocks are falling, the S&P 500 is falling down.
That's
Yeah.
terrible news when the whole staff
Yeah.
are like, "Oh, it's the stock down." It has nothing to do with you as a business,
Yeah.
but it affects everything in a business, so it's not something people take lightly. Like,
Hmm.
you really just wanna be on an upswing if you can construct it.
Yeah.
So, I do wanna talk a little bit last week too. I think we had the, what was it? The, um, World Hydrogen North America, 2025 conference here in Houston. There were a bunch of people in town. And I talked to a few folks who are participating in that program, and got the sense that there's kind of mixed feelings about how hydrogen's going. We're seeing some divestiture across the ecosystem. And I think the big question today is this big like color rainbow we were very excited about a few years ago, from green hydrogen, blue hydrogen, gray. Like, I think there was a fuchsia at one point. And uh, there's a question of like, does that matter in today's day and age, right? And it seems like and we're seeing this a little bit in SAF as well. Like, there's not a lot of commitment to the price premium of green hydrogen. And so a lot of these projects that we're kind of hanging their hat on, we're going to go off and develop these things. Um, it's I would say, like, from a market perspective, like, you still have to compete on price, right? Like, at the end of the day, you got to be under whatever it is, a buck a kilogram, or it just doesn't matter because people are just not going to pay for the premium today. And especially if we're going to see a um, focus more on availability and reliability, like, I just don't see it. Like, and so, like, yes, like, you can sell green hydrogen if it's because it's more resilient or it's because it's more available, not because, like, it's like greener. Like, we haven't seen a lot of uptake and purchase of green hydrogen necessarily for those reasons. And so I think anyone working in the space is going to have to reevaluate their value proposition and think about, what is it that customers really want today? Because there's not necessarily a government incentive, there's not necessarily a buyer's incentive. So what are we doing here? And the reason I draw this back to SAF is I think we saw, lines out the door of people interested in SAF technologies a few years ago. And when you talk to people who are selling and developing SAF today, they can sell supply contracts. They can get all their supply committed at spot price or at index to natural gas. There's not like a significant premium you can get, which a lot of these early technology projects really need because they're not producing at scale. And I think we're just seeing both sides of the same reality between green hydrogen and sustainable aviation fuel. Of course, with the natural gas, like, we are seeing a little bit of a spread, but the spread is just very small between renewable natural gas versus just the regular stuff out of the ground. So just I don't want to call it a correction, but that's just the reality that we're seeing coming out of these conferences and how people are kind of reading the tea leaves on market demand.
Okay, so we expect less investment with on green hydrogen unless there's like a direct,
Like, the thing is that, like, what makes green hydrogen green is, like, it like, by definition, it's coming from a renewable source, I think, versus, like, I don't know, gray hydrogen's coming from steam, usually from a natural gas source. And so, like, the other thing about green hydrogen is, like, it's you can kind of turn it off and on with the power grid. And so there's almost like a different value proposition. Like, the value isn't that it's green or that it comes from wind. It needs to come from the fact that it has other benefits. Like, if you think of, like, a electrocatalysis system, you're not going to be subject to the price of natural gas. You can go off and get a long-term supply agreement for low-cost solar, right? So, like, the fact that solar is the cheapest thing to install today, you can go set up your new catalysis facility. You can go buy that long-term contract of cheap solar plus battery. And guess what? You won't be subject to kind of volatility that might come with indexing against gas. Like, that is a resilience story. That is like, my economics now are locked in over the next 20 years. And so we can figure out how much money this thing prints. But it's no longer, I'm going to do it because people pay a green premium for my chemicals. It's all going to be about, like, can I actually engineer a better, like, financial outcome? And so I think people who are building these need to focus on these, maybe what was considered a secondary benefit, but now today it's like, no, the primary benefit is the fact that this thing isn't subject to funky commodity prices, or uncertain supply, especially in parts of the world where maybe you have to ship it in, right? So, what we saw in Europe, of course, was the weaning of Russian gas from European supply. And I think everyone kind of looked at the US and said, oh, great, the US has an oversupply of natural gas. Let's go get all these export terminals going. Well, guess what? It costs like a buck to ship a SCF of, or whatever it is, MCF of fuel over to Europe. That's not cheap. And then you're also subject to, like, if there's a 30% trade tariff now on energy exports, like, of course that's, like, not going to make anyone happy. But guess what? If I have a green source of hydrogen that's built from solar panels in my country, not subject to tariffs, because, like, the thing is, could even be producing power right on the acreage next to my factory, right? Like, there's this massive decoupling that's going to be a benefit to people who are developing these resources, because now you're not subject to kind of international energy supply constraint.
Yeah.
That's the value of going down and building, like, buying an electrocatalyst, is you have access to this, like, independent power source
It's
and and
local.
and and it's local, and it's like
Mhm.
you have control, and you can plan for 20 years, not for like if there's going to be a war with Hezbollah or something, and is that going to affect my prices of energy,
Yeah.
right? And so um, part of the like I think the other thing that's kind of come up recently that I think people are recognizing is that in some ways we've hit like peak oil, but it's not like peak demand or peak supply. It's really like peak trade or peak like merchanting of it around the globe, in part because like places like China um, decided to get off like the oil industry and like build ridiculous amounts of solar and storage. And so, yes, China has like hit peak demand in 2019. Some of that might be because the economy is a little shaky there. But the reality is, it's just because they're generating more megawatts locally and they just don't need oil and natural gas anymore. And so, so what I go back to is like, okay, green hydrogen, it's not necessarily about the hydrogen production. It's more about like, how do I fit into this world where people care about like really shortened energy supply chains, right?
Mm. Yeah. And I think that's what it is at the end of the day, because often we're like, oh, this energy generation source is better than the other, but it's like there are different use cases for each
Hmm.
one of these, right? Like there are use cases when like, yeah, fossil fuel absolutely makes sense, and especially in this new world era where trade is we're going to have to rethink where we're getting our resources from. Um, that local becomes important, and if you
Hmm.
have a fossil fuel available locally, and if that's the cheapest source for you, you use it. But for other areas, you don't have that as an option. And when it comes to hydrogen, also it's like, what are you using it for? Because for some, hydrogen is used as a fuel itself, but also for storage,
Mm.
right? So when you are doing renewables, the idea that people were also thinking about is like, okay, how can you then convert it into hydrogen, and then you can use hydrogen as a fuel to get power back into the grid. But what we're seeing, at least in Texas, happen a lot is, it's solar plus battery storage. And batteries are their capacity is increasing. There's a lot of technological development happening there. So in Houston, just last week, we had one of our companies called Peak something. Just wait, what was the name of the company? Yeah, Good Peak.
Hmm.
Just raised 22 million in construction debt financing, and we were talking about that, Jason. That it's kind of battery storage, at least in a place like Texas, like it's growing so fast because solar is growing so fast, and they make such a good resilient system together.
This is Trent's company. Sorry, I don't. Yes, we
Oh,
know
the
Trent.
trans company. Okay,
Yes,
yeah,
I was like, I remember seeing this, and it's funny. No, he would be the right guy for this. Good.
yeah,
Yeah,
right.
yeah,
Yeah, so no, it's just amazing to see, Texas in the past couple of years surpassing California with solar development, and then just adding so much storage capacity, which recently, when we've had extreme weathers, have shown the resilience of the grid. So when you don't have that much solar, you get the batteries kicking in. And it's a low cost solution than having like a natural gas fired power plant, running um, the whole time, but
Mhm.
being able to turn on and off the battery when you need it. And also just being able to show that now you have infrastructure debt financing available for these kind of projects. So I'm really excited to see how that's going to shape Texas even more, given that last year in 2024, 50% of our energy came from solar and wind and
Yeah.
battery storage.
Yeah. So on the one hand, like it's unfortunate because all indications are like the tariffs are going to increase kind of the source material of solar by 30%. But I think the reality is like the batteries are what's going to drive the economics on these things now, and it's about having kind of that dispatchable supply available. And I mean, it's critical that they're doing both. Like they're not just a solar developer, right? They're not just a battery developer. It's like this combined like big project where you put two and two together and you're suddenly creating five. And yes, there are going to be risks around kind of regulatory and tax credits, but the reality is like the stuff is just coming in cheaper and faster um, than other sources, and it's like what we've been talking about the last few weeks, right? If you want to put 100 megawatts down, you just can't wait for a gas turbine to show up, but you can get one of these deployed quickly, and then you get to develop a 20-year contract off of it, and kind of have that control in a way that's just much harder with a natural gas based solution. So I'm not surprised, and obviously they got really smart people there also working on like how do we arbitrage the power production itself. So it's what this tells you is it's bankable even in this environment. This is a bankable deal, bankable assets, and that's kind of what legacy energy has to compete with in a way that just didn't exist 2 years ago, 4 years ago. So
Mhm.
it's really a good time.
Yeah. And I know as much as we complain about ERCOT sometimes in Texas, like when we had the winter storm a few years ago, and we weren't able to get electricity from other states, but at the same time, just having our own independent infrastructure here allows us to be able to scale solar and storage, I think, in such a fast way compared to others, because we're kind
Hmm.
of isolated from the rest of the country. So
Yeah,
I
but
think there's something to say about that too.
yeah, I mean, it's just like with an open market, like hey, you're able to take risk, you're able to get online quickly. I wouldn't say it's perfect, right? Because
Mhm.
there wasn't necessarily there is no mechanism necessarily to compensate capacity, which is how we run into those issues with Uri, because it's all about delivery. But the innovators figure it out, and they figure it out by doing this like solar plus storage combined model, where they can kind of manage a couple of different parts of risk. So definitely a great place to get started. And for better or worse, the as we get better at it, the cost of energy will decrease, and there'll be less people coming into the market. But that's the nature of a free market, like what we have here. And so
Mm,
we're able to go quickly, and people create a lot of value when they deploy these things first, right?
mm. Yeah,
So
good.
do we
Yeah,
want to talk about this article I sent you from Carlisle, or do you want to talk about next week?
yeah, we can talk about that. I don't know if read the article.
I only read I don't read anymore. I only read the bullet points.
Okay, okay. What are the bullet points?
So I think there's this trend we're seeing amongst like energy strategists, and I think you're picking it up here, about like what's going on with how people are prioritizing energy. And so I think I shared a few weeks ago, we had this presentation that I saw from Arc Energy out of Canada. This one is from Jeff Curie over at Carlisle Group. And this one he's calling the new Jewel Order. And when you dig into it, the headline is energy security. That's what's going to be driving people today and tomorrow. I think versus like decarbonization. So I think a lot of people are looking at like how do we describe like the 2015 to 2025 era, and it's kind of marked by things like the Paris Climate Agreement. It's marked by everyone like recognizing that we need to decarbonize, and that drove a lot of like the climate investment, especially in 2020. But there's a couple of things that have changed in the last 10 years. Like obviously there's the shale revolution in the US, um, and the 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 thing about like the US in the last like 50 years is that we projected kind of military force around the world to like protect energy supply chains. I think that was like hate it, love it. That's just kind of the narrative. It's like why are we trying to keep the Suez Canal like clear of for shipping lanes, and a lot of it's just to keep the energy supply chain stable, because if you keep global energy use stable, then theoretically you have less kind of global conflict. And clearly, like over the last 12 months, we've seen that kind of evaporate. And so we saw that with the war in Ukraine. Obviously, like Europe is looking at their energy supply chain and saying we can't necessarily get it from good places. And so, and we saw, obviously, as I just discussed, China saw that 5 years ago and decided to get off the energy supply chain. And so, I think people are looking at this and saying, okay, what's going to drive energy investment? It's energy security. And we've always talked about this in the U.S. This is why we had the RIPSI this 10 years ago. We had the Energy Consortium for stripper wells. It was about kind of making the U.S. a net exporter. And now we're here, and everyone's looking around saying, okay, is the U.S. going to guarantee our energy security? And the answer looks like it's going to be no. So what? So when people are buying energy now, they're going to be thinking about is how do I shorten that supply chain and make it my backyard? And so I'll go back to what I said at the top of the hour, right? Like maybe there's no green premium, but there's the security premium. Like, yes, I will build solar and batteries in my backyard because I can control that
Mm,
and I can turn it on and I can make sure my factory is supplied and my catalyzers are running and my plastics are being manufactured because now it's, once I've installed this like solar panel system, it's not going anywhere and I can maintain it. Um, and keep it running versus if you're on a natural gas or oil based supply chain, like you're kind of subject to like what inventories are halfway around the world. And so independent of kind of is it better for the climate, like just the value prop is there today now for
mm,
climate technologies. And no matter what people do to like want to slow it down, like it's just more valuable, right?
yeah.
Like if I can get a geothermal, well in my backyard that produces 10 megawatts of power, not my backyard, but like, at my data center, right? Then I'm like not as worried about my power grid
Mm,
because that supply is locked in for 10 or 20 years.
mm,
And so there's this incredible value even with interest rates being high, even with all this kind of local risk, you can control a piece of your long term risk, right? And
mm,
so that's really what people are talking about is security is going to drive the transition now because everyone realizes like energy is so essential for our industrial world, right?
mm.
And so you're going to lock it in. And so
Yes.
as much as it might be painful here in the US to say, look at all these programs get sidelined, I think the smart entrepreneurs are going to look at this and say, I'm going to turn my value proposition on a dime. And now I'm going to build a product that's maybe less about the green premium and much more about these things that people will pay for. And they're paying for security.
And I think it points to like it's getting past this ideological war against like fossil fuel versus renewables. Like it's not really about that, and it shouldn't be. It's about what's better, and what's a better business case, what's a better business model, what's energy security. That's what we're really going for, instead of just blindly pushing fossil fuel, which some do because they're dependent on it. Their business are dependent on it. That's how they make money. But like you said, smart entrepreneurs, smart decision makers, lawmakers will look at, okay, what's better for us to be resilient, to have secure power and not be dependent on natural gas coming from another state even.
Yeah.
And eventually, yes, not in the next 10, 20 years, but eventually the natural gas field where you're building all your infrastructure that's dependent on it will run out. But solar will never run out until, the sun keeps on rising.
We got another 3 billion years on that one.
Yeah, until the climate change is like so drastic that, we can no longer see the sun. But we hope that's not going to happen in the near term.
Yeah, and the beautiful thing about solar is like 99% of the material is like silicon, which is like sand. Like that's just what the crust is made out of. So we got plenty of that to go around. Um, but I think the I don't remember where I was going with this, but uh, it's going to be the time for people to um, really rethink what is the market going to need, and sometimes like as an entrepreneur you got to look at your technology and say is it the right technology. No, but we're close to the market. We're going to figure out what people need today,
Mm,
and go off and build that. And there is, there is an investment thesis there. People will pay for what they need, and we always see this, right? When oil supply gets tight, the price of gas goes up, like gasoline, right? Like even here in Houston, right? The last time we ran out of gasoline, and it went up to what $4 or $5 a
mm,
gallon, and people were reselling it to each other. Like when you need it, like people will pay for it, and I think that's the really strong market indicator here. And so when we think about technologies that are going to be hot, like it's going to be microgrids because it's about local
mm,
control, local management. It's going to be about deploying, just like what we saw with Good Peak, right? It's going to be about building these projects locally, or if you can incorporate in your microgrid and then be a supplier into the larger grid afterwards. Um, There'll be a mix of people doing like standalone projects and tied in projects that are behind the meter. It's going to be about supporting those hyperscalers with long duration power, and then everything we're seeing from solar to projects to project to managing projects to geothermal. and kind of having this diverse energy supply. It's just unclear that you can beat the fundamentals of, there's this thing that's just more valuable now.
Mm,
And I remember what I was going to say. I think one of the things that like those of us who are like engineers like laugh at a little bit, like in all the discussion about different types of electrons and hydrogen, the molecules don't have a color. Like they look at themselves and they're sitting at a piece of copper and they're going, "We're just moving energy, guys. Like we don't think about any of this." And at the end of the day, the kind of color semantics were there to try and be a shortcut for people to describe the value of something, but at the end of the day, when someone needs a megawatt of electrons, they don't really care where it comes from. They just
mm,
need it, right?
mm.
And we're just trying to say, look, this is about creating those electrons that are available when and where you need it.
Yeah. And I think one of the things I'm reading through the bullet points of the article, talks about how fossil fuels are attractive as long as they can be traded. Um,
Exactly.
and that's really where the difference is going to come in this new era, where you don't want to be dependent on trading anything. Especially China doesn't want to be dependent on that.
Yeah.
Um,
And
mm,
traded isn't necessarily financial traded like with forwards contracts. It's like, can I literally get my like, TCF from point A to point B in terms of natural gas? And and what's it going to cost, right?
mm, yeah. No, super interesting. Yeah, I've
So
posted the
yeah,
link to the article on our live, so anyone who wants to read that, they can do so. Yeah.
yeah,
So, what else did you want to talk about before we move on to what's coming up?
yeah. So I'm happy to talk about like what's going on in the next few weeks.
Mhm,
If we want to do that.
mhm. So we said Rice Business Plan competition this week, and then we have next Monday and Tuesday we have the Developer U workshop here
Mhm.
in Houston. Do you want to talk a little bit about that, Jason? How they came to Houston?
I
What's
I
the
should be more prepared to talk about it, but I'm not. No, this is a group that's put together by the Creo Syndicate, which is a 501c3 out of New York that's really focused on kind of improving capital deployment into climate and decarbonization projects. It's partnered with Wilson Sonsini, who's a firm out of the West Coast, who was in the early stages of working on yield codes and kind of asset-backed financing for climate. And then Spring Lane Capital, formerly Black Coral Capital, for those who've been in this industry for more than a decade, and they're coming together to kind of teach the fundamentals about how to do project development for energy projects and specifically clean energy projects. And so when you think about like what Good Peak is doing, um, how do you go out and cite something that's going to have the components of legal, finance, and business to really accelerate deployment? And as a lot of these technologies are now in the green, so to speak, or in the black, I guess, from a financial perspective, like obviously the projects, all the good project sites are going to get cited and taken up, and then the marginal projects will have to be continue to be developed. And so as you have this kind of monotonic growth and demand, you're going to need smart people to figure out like where to put those things. And if you don't know what you're doing, it can be 3 or 4 times more expensive than if you know what you're doing. And so this program is about helping educate people on how to do this so they know what they're doing and can more efficiently deploy projects. And what does that mean in some ways? If you have more smart people working on this, you don't need to be a huge business to do big projects. You can actually do smaller and smaller projects and still be profitable. And so there's a little bit of democratization here that this is going to enable. Um, and
yeah.
so very excited that they're coming in. I think
Mhm,
they're educating about 40 of us. You're going to be one of the people educated,
mhm,
I think, in this program.
mhm. Yeah, no,
So,
I was really
yeah,
excited to sign up, when they said for anyone who's doing first of a kind projects, most of our entrepreneurs are. And the big question mark is like, how do we fund these? How do we finance these? And so really being able to educate us on, what do financial professionals require from these project proposals when you're going there and trying to get these projects funded?
yeah. How do you make it bankable? Because
Yeah.
banking equity is like so much cheaper than venture equity, right? So
Yeah.
it'll be
Yes.
good.
Yeah. So basically, like helping project developers scale.
Yeah.
And I'll put a link to this again on our live so that you can, because this is the first time we're doing it in Houston, but we hope that we can bring them back here again. I think they're doing it in, yeah, they're doing it in, yeah, they hope to do it in Dallas and Austin sometime soon too. But I'm excited that they're doing it in Texas first. Mm.
Yeah, if hopefully we can make it an annual tradition with them. So,
Mm.
also this week, I think a bunch of our companies, I think 7 of them are up in Bilbao, Spain, visiting the Energy Tech Summit. I know Juliana's taking them on the trip, and hopefully that's again something we'll get to do every year. And this year we're focused more on Series A plus companies going out there who are ready to deploy um, technology. But I think even 3 or 4 of the companies aren't necessarily participating in the full trade mission. So it's just a good opportunity to be involved in the summit and engage with Europe, which is going to drive a lot of demand
Mm.
um, there. And
Yeah.
then the other thing, go ahead.
No, I was going to say Emperon's going to be there. I was just going to throw in a few names of companies that will be there. I think Technobuild, perhaps.
Hmm.
I don't know if you remember who. There were a few
I honestly don't remember who's going.
that I named, and I'm really excited about them. Yeah.
Yeah, but folks coming from all over, so
Mm.
it is good. And then the other thing is we're doing a field trip next week. We're going to go visit Hurt the Metals. That is kind of a members only program, but if you ask for an invite, I'll probably give it to you. But we're going to go see their development mini mill in action. We're going to hear about kind of their development cycle, and then obviously it's an opportunity for the founders to and members to engage with each other. So I'm pretty excited for it. Um, I always nerd out on seeing how things get made. So
Yeah, no, I'm really excited. Actually, this is the first time we're actually, well, this our second field trip, but the first time where it's actually a facility. So
yeah,
I'm excited to see that. Mm.
and we're doing carpools because they're up in I'm going to say spring,
Yeah, there.
which is a little bit of a hike for some people. And so um, we'll be coordinating some of that. So if you register, there's an opportunity to kind of decide if you want to carpool or not.
Yeah.
Um,
It's
yeah,
not only for convenience, but it'll also be more fun because then you get to network and
obviously.
talk to each other and get to know
Yeah.
one another. We'll maybe
Yeah.
we'll have some like snacks in the car
Yep.
to share.
Um, yeah. Green snacks. Well, we got to get some ice cream is kind of the moral of the story here.
Okay.
Um, But
Good.
I think
Hmm.
the other things we have going on is Pilotathon is opening up for in September. We're starting to take applications for people who want to showcase. Um, I think we're getting some prizes together, which is going to be awesome. More about that to be announced in the future. We're also starting to take applications for this program called Liftoff, and that's to teach entrepreneurs kind of the best practices for raising your first $1 million. We're going to be doing that one at the Ion. We got a great list of speakers kind of coming in to share their experience. And it'll be a real practical skills test. I am not doing business workshopping after the first one. Like that's something you can do with your EIRs, but this is really about the skills it takes to kind of figure out how to sell your business and sell your vision. So we're doing that. And then what else is going on next week or this week? Um, I think there's this on Saturday. It looks like there's a Saudi Space Up competition that has applications due, obviously focused on space technologies and communications technologies. Looks like they're looking to award $28 million in contracts for solutions by September. The due date is Saturday. I don't know if that's Saudi time or Houston time, but just keep that in mind. But put that on your radar if you're looking for some funding for projects that might have potential use in aerospace. And then, don't we have a DTL next week, or is that in 2 weeks?
That is on the
23rd.
23rd. Yeah, so that's in
Yeah.
2 weeks, and that's going to be Women in VC. We're going to do it at Rice University at their McNair Hall, the business school, and we're collaborating with the undergraduate venture club there. So I'm super excited about that. Mm.
And unfortunately, it's also at the same time as the EarthX eCapital Summit in Dallas.
Mm.
Obviously, if you can't take 3 days to go to Dallas, like stay for the German to lead. But the eCapital Summit's usually a pretty good one. It's historically been hosted by Trammell Crow. out there, and this has been really good for meeting investors and connecting with others who are interested in sustainability. And I guess it's around Earth Day, right? April
Mhm.
20th is Earth Day, so that's really like their kind of Earth Week focus. So that's the other one I would pay attention to if you're looking to connect with people interested in deploying capital into our space.
Awesome.
Good.
Still a lot going on in April, huh?
Oh yeah, always. It's just we're taking our breather because everyone else is doing stuff.
Okay, awesome. Um, Great. Well, then we'll see you guys again in May. But in the meantime, if you haven't yet registered for our newsletter, do that. You get a lot of the updates that we talk about, at least event-wise, what's happening, what you should be applying for, what you should watch out for is there, and you can go to our website and sign up for that today.
All right.
Mhm. Thank
Sounds
you.
good. See
Okay.
ya.
Bye.